Should we buy or sell the euro/US dollar? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So euro, the dollar, they have been a huge topic because the move has been extremely big. Euro is basically at the lows, and we have the dropped minus 15.30% away from the 52-week highs. And when we compare it, to other currencies here, you can see that that is a very high percentage. So this is the big picture weekly data points, and we can see that we have a monster topping pattern. What is very dramatic is that we have fallen below some very critical support. So in this zone here, there was the very reasonable expectation that we would see some kind of more solid support. We did get, what is it? Well, yeah, 2 weeks of a bounce, and that was it. We have broken below those support levels, and this is very dramatic. You might initially look at the chart like this and think that, well, this is good for America. But that is not how Forex works. If a currency becomes too strong, then that actually becomes a problem. To take me as an example, I live in Norway. So if I am now going to buy anything from America or that is denominated in the US dollar, then that would be way more expensive for me now than it would be just a few months ago. Hence, I am dissuaded from buying stuff from America. So yes, there is a certain point where the strength of a currency becomes a liability. But anyway, bears are obviously in control. Looking at the daily data points, we are below almost all moving averages, except the 5-day moving average. When we look historically, big picture at it, looking at RSI, we are extremely low. But the issue here with Forex is that we were lower in 2008, 2010, and also here in the 2014-2015 period. Same thing with the PPOs. We are very low, but there have been quite a few times in the past where panic pushed us even lower. So it's messy because on the one hand, you look at the chart like this and you are like, well, it's very low. Looking at the daily data points, it looks very buyable. But then again, the issue is that there have been multiple panics. So I give the bulls 2 here on the technicals, but just with a generic oversold signal. As I said, the issue is that we have seen these types of RSI and PPO trigger rebounds for the euro in the past, but there's been quite a few times where we have seen substantially lower levels. So it's very messy. But I think the current setup is more dangerous for new bearish positions than bullish positions. That is why the bulls get a 2 here. When we look here at the seasonality for the pair, in red here to the right over the last 10 years, and also in blue over the last 7, and also in blue over the last 7 years, you see that we usually see a little bit more weakness into 19-20-ish of July, but then we see seasonal strength from the euro. In green here, over the last 5 years, we usually see more systematic weakness. To the left, over the last 5 years, July is one of the strongest months. The last 10 years, July is one of the strongest, closing higher 60% of the time. Then the last 20 years, we do see that July usually gives the euro a bit of a gain, closing higher 50% of the time, and compared to other months, that's pretty good. So there is some seasonal strength for the euro right around the corner. The bulls get a 4 here on the seasonality. When it comes to the fundamentals, I do give the pulse a 2 here, and that is because Forex is moved by various, big organizations and networks. So it is not, especially in the current context, with the conflict. It is definitively not in America's interest for Europe to see the currency just crushed. It is a very bad timing for that. If the euro continues to weaken, then it there drastically increases the odds that Europe will shift political positions and drift a bit away from the American-led world order, simply because it doesn't benefit Europe. That's the thing. It's a question of self-interest. So yeah, my point with this too on fundamentals is that yes, I do think that the organizations and networks that significantly affect these currencies, they do not want the US dollar to become too strong in this specific context. And yes, they do have the ability to affect those kinds of variables that move, super currencies like this. So next we will look at relative performance. So the long term, the correlation with America is at 29%. That is positive. We have a 50% correlation with VGK, which is the Europe stock market ETF. So it is interesting to see that the difference here in correlation, it is there, but it is not as dramatic as one might think. Then you have minus 53% with the 10-year yield, and then 99% negative with the dollar index. Looking at the daily data points, 86% here, well, let's say 87% with S&P 500, 94% with VGK, minus 88 with the 10-year yield, and almost 100, 1-to-1 negative with the dollar index. So looking short and long term, the strongest correlation we do get is with the 10-year yield, and we had a negative correlation, which means that if the 10-year yield goes down, it would usually be beneficial for the euro. Of course, there was a very strong correlation with the dollar index, but it doesn't really give us any additional intel. So, looking here at MACD, the recent RSI here from this peak and also the PPOs, we see that we are pulling back from levels that have formed major peaks in the past, like during this rally here, very similar here on the PPOs and the RSI. We also saw these very high regions before, like back here and also here. So given these very extreme readings, and additionally, we are seeing that we are pulling back from a resistance level. Let me just draw that in. So there certainly seems to be some resistance around here. We also see here that there usually are some major time cycles for the 10-year yield. And we are towards the middle now of this time cycle, and so there could be a pullback, a more big picture pullback, and we have seen that before. Previous times when people thought that the 10-year yield would go to the moon, then we do see some mean reversion. So yeah, that would be the primary assumption. Looking here on the daily data points, we do see. Okay, let's get the right tool like that. We do see a head and shoulders pattern in development, which is a bearish technical pattern. Looking here at the relationship between the Euro USD pair and the 10-year yield, we do see that we have, when we look really like big picture, we have fallen back to a level that it formed a low back here, formed a low back here, and also back here and here. So that's definitively very interesting. Additionally, when we look at RSI, we do see that this low end of RSI that we are now bouncing from, it has formed key lows in the past and also led to some pretty substantial strengthening of the euro in this pair, meaning some mean reversion to the upside. So let's look here at the seasonality like that. So the seasonality is clearly bearish, leading into later August. Let's look at the relationship between the currency pair and gold. Yeah, being in a pretty substantial downtrend, which means that it has, for the Europeans, it has been better to be in gold. Yeah, so looking here, we are seeing some strengthening here of the euro, US dollar pair, that is. But there's been quite a few of those in the past that haven't really panned out. So let's just look here at the seasonality. So looking at the seasonality tool, yeah, we usually see some weakening of the pair leading into the 10th of August and then some strengthening. I do give the bulls a 4 here on relative performance. There were some pretty interesting findings here. So overall, we do end up with a 3 here for the bulls. But this is very messy. It simply is. We don't have like a clean entry signal or stop loss. This is simply a question of probabilities. So basically, what is the most dangerous new position to put on for this pair? Is it to go long or short the euro? I think that at these levels, given this data, I would be more concerned about assuming a further fall in the euro than thinking that there's going to be at least some rebound. So we have some time left now, so let's look at some relevant securities. So here is gold. Yeah, so gold, it definitively has sold off. Unfortunately, we are approaching the red 200-week moving average, though. So I think that the key level to watch is definitively that one. So yeah, so keep your eye on gold for that. Silver also in trouble. It has lost all kinds of support levels. But you could make the case that we have fallen down now to a potential horizontal support level. At least it is a point of interest for the bulls here, because this is a pretty substantial fall. Here is a Bitcoin / US dollar, and we are still very much just stuck below this red 200-week moving average. Just really can't. So the bears can't really trigger a sell-off. The bulls can't really trigger a rally. So it's very much a standoff situation here. Very messy, really messy. Looking here at the daily data points, we are forming some kind of lowish thing here. I mean, just looking at this, it is interesting, but very like buying the low end of this range. That is, at least it is a way to put on a position where the stop is a bit tight, because the move from these lows, it is 7%. So to buy like here and then have like a 9-ish% stop level, that is a bit wide. Here is platinum. So platinum, it has fallen down to a level of interest for the bulls. At least we expect the bulls to do more things here than the bears. Potential key support here, back here, and here you have a cluster of support levels. Here is palladium, another precious metal. Palladium doesn't get a whole lot of attention, but it is definitively one that trades, as an example, very much on technicals. Just look at this green 50-week moving average. Tons of support bounce, very buyable, very shortable as well. You can see here clean resistance level, and we were thrown right now, not simply firmly below that resistance level, but also below the 200-week here in just one swoop. Here is the US dollar / the Russian ruble. So we have seen back here a couple of weeks where the US dollar strengthened, but this week we did see the ruble fight back a bit. And it is interesting to see that the bounce, it did come from this, very, very key historical support level. So yeah, even though it is for the Forex market, we do see these key technical support resistance levels play themselves out. And that is not simply because it is a technical level, it is because of what the technical level means in the real world. So yeah, definitively, the last months should convince everyone that the Forex market is extremely important. It's something that doesn't get a whole lot of attention on FinTwit, but whenever you trade anything in the market, you are also simultaneously trading Forex.